Hey everybody. Good morning. Good morning. Good morning. We've got channel members Ivan, Jerry, Lieutenant Colonel, Craig, Hugh, Don, Will, Kevin, Darren, Ed, General. Good to see you. Sir, Svenborn, Scott, Joseph, Rob, Terry, Diane. Yeah, I still don't feel great, so welcome to the show. Correlation of money supply. We've seen the markets correlated to money supply. And guess what? I've got a new one. Check this out. This actually ties into yesterday's conversation, actually. Check this out. Look what we're doing. Dun, 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 dun. Let's copy this and paste it over here so we can draw on it. Make that a little better. Look at this right here. And this right here. Uh-oh. When that took a dip back here, did decouple for a little while. But it's mostly been running right together. This is interesting to me. And for some reason, my headphones are not taking over my phone. So I'm gonna mute that. And well, it's particularly interesting. So this is interest rates on the Japan 30-year bond, and this is Bitcoin's price in US dollars. This goes back to May of last year. We kind of been hanging. Like I said, we took a little diversion on Bitcoin. We met back up over here. Took a little dip. You may remember what that was. Been climbing on that 30-year bond, but then the 30-year bond took a little dip here. Does Bitcoin take a little dip, or do we decouple again? I find that pretty interesting. And these correlated when they're correlated, not when they're not. Is this tied together, or is it not? Love to hear your feelings. See, these spooky, these are like spooky things when I see them in the market. I'm like, oh, dang. And we've commonly seen the M2 money supply pulled, the global M2 money supply pulled forward 3 months, rides along with Bitcoin pretty tightly. And I'm trying to remember if I have a ticker that's lined up for that right at the moment. I don't think I do. Let me see if I have that chart from a couple weeks back. Give me a second. You gotta be careful on these. I use the Nike NKD futures as kind of a global liquidity indicator. It's been pretty darn accurate as far as predicting even U.S. market pullbacks. That's the wild thing to me, is that the money supply has a lot more to do with anything. I mean, central bank liquidity is 98% correlated to the U.S. stock market, the S&P 500, and it has been as far back as we have data on it. So what's the big, I mean, that's the biggest indicator of what's happening. Now, the problem is coming up with some sort of real-time indication of global central bank liquidity is mostly very difficult. It's just not a transparent measure. Like China loves to hide their numbers. I'm sitting here looking at the other screen trying to find that money supply chart. I don't think I have it. I'm back into February. Not finding it. But China loves to hide their numbers and not be very transparent. Imagine that. And most governments have a reason to not be super transparent. And it's back to the negotiation tactic. And China loves to pretend like they're they're great all the time, even if they're not. And that was kind of the downfall of the USSR too. They put out that they were great all the time, and they started believing their own numbers, and that kind of led to their own downfall. You can say no, that's not it, but bottom line, it kind of was it. And so when a country lies about their numbers and puts it out and then possibly starts making decisions based on their own lies, that's kind of like where everything starts coming apart a little bit. Japan here having a little bit of trouble. So got to be careful. Now, the FOMC minutes are coming out today. Coming out today. It's at 2 p.m. Yeah, 2 p.m. right there. How serious are they about no rate cuts? How serious are they about potentially rate raising? I think that's what they're really going for. Now, the IMF, the International Monetary Fund, put out that they expect double-digit inflation for the foreseeable next several years to try to get debt to GDP ratios back in check. Global double-digit inflation. So it's like the game, right? Increase the money supply, assets go up. Even Trump started tweeting that there's just not enough money to cut. We're going to focus on growth. Trump started tweeting or posting or whatever you want to call it about that. Elon gave up basically focusing on cutting. He stalling out at $50 to $60 billion with Doge savings, and then switching over to focus more on SpaceX and Tesla and grow, go back to growth. It's, this is going to be it's going to be an interesting situation, because that was the only way I saw fixing the debt problem. If you've never seen this, US debt clock right here. If you've never been here before, this is usdebtclock.org. Look at this. This thing we're about to hit $37 trillion right here. Right there. $37 trillion coming up. Won't take long. So how do you fix this when the GDP number down here isn't crazy high? You grow the GDP. Get the debt ratio back on check. Get this back below 100% of GDP. How do you do that? Inflation. That's how you do it. We did it in the 80s. I know some of you were old enough to own things back in the 80s. I was not. Maybe you had a loan on something. Maybe you bought something in the early 80s, and by the end of the 80s, you looked at how much you had spent on it and what your loan was, and you're like, that was a heck of a deal. Because all of a sudden, cars went from being a few $1,000s to close to $10,000. A few $1,000s in the 70s, maybe 2, 3, to being closer to 10,000 toward the end of the 80s. Now we've got cars that, a base model car, $30,000, $40,000. Mid-level cars, $50,000, $60,000, $70,000, and it's crazy. Yeah, 17%, it's high, but we did ramp. All that inflation, we're probably going to do that again. That's probably what's going to happen. I was talking about that yesterday. We're in the all clear period where it's like, everything's okay. But we're probably going to ramp back into another period of inflation. And then as we do that, it's going to hurt is the problem. If you're just sitting on cash, your cash is going to become worth a lot less. So you got to try to keep up with the inflation they're going to do. or that's going to happen. I mean, it's not necessarily they're going to do it, but it's going to happen. So lots of interesting numbers on here, and they kind of keep ticking along. You can see U.S. asset-backed dollar. These numbers are bad. Bad. Anyway, moving on. So money supply, pretty much the only thing that's correlated to the asset values. As we look at global asset values, gold sitting here at 22 trillion. What could cause gold to double? Well, if we ramped up inflation, everything got twice as much, gold doubles. 6,600. That's the one thing. Like, where does the money come from? Inflation is really the only way that all these companies become worth double what they were. How does Bitcoin get to big numbers? Inflation of the dollars. So, love it or not, that's the only real solution I see to fixing the U.S. debt problem. Make it so that 36 trillion is just pennies on the dollar. It's going to hurt. As interest rate, the big problem though, as the interest rate climbs to try to keep that debt in check, we grow the debt at a faster rate. It's almost ridiculous. Like it's. I'm not saying it is the solution, or it's going to fix the problem. Eventually, we're going to have a day of reckoning. I think that based on the S&P 500 chart, that day of reckoning may come sooner rather than later. So you got to be careful. Got to be careful trading. That moved down into Friday. Big rip up yesterday, but we stopped right there. Now we're up slightly overnight, like 6 points or something. Yeah, 6 points. So we may step just over that line at the 786 and then bring it on down. This is where I expected the A to bottom out. Potentially we get a big B wave retrace to a 618. And then we take the or the alternate. Is this a 1 or is this a 2? So is this a C or a 3? I vote for a C. If we get a 3 and a 4, 5, that's where things turn a little bit sour. A little bit sour grapes here. So now there is, all bet small, there is a potential that we just go ripping right out, go make a higher high, and then do the bigger correction. I've talked about that quite a bit in the last couple weeks. I don't really want to see this. Like this could be really bad if we do that. So don't want to see that. Talked about it quite a bit though. It's overnight action. Still just stalling out here. This looks like we got some sort of A, a B, and this would be a 1, 2, 3, 4, 5 for a C. Could go just a little higher. Then probably gonna go take a trip down again. If we hold here, that might be setting us up for that breakout higher. If we crush it on down here, we're probably going on down. That would be that A, B, C, or 3 potential. So how this unfolds is going to tell us what comes next. What comes next? NASDAQ pushing the limits here. This actually might pop up, make a higher high. Possible. Russell looking quite a bit more bearish. As I've talked about, this chart has looked bearish. It hadn't really turned bullish since we topped out back here in 2021. And this is where, if you think about it, This is small caps, and it's a lot of companies. Like 80, I think it's somewhere around 80% of the population, maybe up to 85. 80% of Americans work in these companies right here. It's like why does everything feel pretty bad? Well, that's been going nowhere since back here in 2020. Where's the economic advance in these companies? That's a whole lost presidency right there. And they're not really small businesses per se. They're just small caps. Small market cap, but that's a lot of people working there. And this, unfortunately, looks like we're about to flush the toilet here, fall out of the bunk bed, and go visit much lower levels in the coming years ahead. Oil. Just been consolidating right there. Nothing really changed in 4 days. Just sitting right there. Here's the resistance. Here's support. I expect us to pop on up, but we don't have to do anything. We just keep sitting there. We can sit there indefinitely. Frustrating, but we could. Gold up ever so slightly. This thing fired off about 9 gazillion alerts last night for me. I have a 5-minute gold pattern I watch, and with the chaos that unfolded overnight, the choppiness here, it fired off a ton of alerts. Like it was like alert, 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 alert. I suspect we topped out. Yeah, that basically hit the ideal target right there. Set up a 1, 2, 1, 2, 3, 4, 5. Then we do a 3-wave retrace, and then we do what's going to feel like a crash in gold prices if we set this up. I'm going to remove that and remove this at this point because we hit both those targets. Next target down, right in here. Then maybe right over here. And then the big drop down here. So that's what we got cooking on gold. Looking for this to come on down. 3-wave retrace. And a bigger down. Bitcoin. Not sure here. That price action. While it looks kind of similar to this, there again, it doesn't. To me. I have this sinking feeling that we're about to get a bigger pullback. And we may just retest. Pull this back up to current. Let me just retest this orange zone one more time. But I think it would be a lot better if we go all the way back down. Over here, somewhere in that 90 to 92,000 zone. Looks more clear on the spot market chart right here. A little more clear. See how that's a first move down, retrace, holding that 618 pretty tightly, setting up the potential right there. Excuse me. Sorry, didn't mean to cough in your face there. And Ethereum doing nothing. Absolutely nothing for, what, 2 weeks now? Yeah, 2 weeks, nothing. Big bunch of nothing. That will probably go with Bitcoin if it pulls back. NKD, Here's the, is that a 618 retrace, measured bounce? It's kind of scary. Everything lining up with the same exact pattern for potential drop. We've got S&P lining up, we got NASDAQ lining up, we got Russell lining up, we got oil kind of potentially has a downside potential, gold lining up, Bitcoin lining up, Ethereum lining up, NKD lining up. Gotta be careful. Look at the S5TW. We ramp this back up near the top. So crazy. Look at that big dip. Took a big dip, popping back up. Usually we see this top out and then flush on down. We did not hit the bottom. It's probably going to do it. You know, see, look right here. Big dip, pop, big dip. You know, a couple pops there. Even made a higher, you know, even hit the top again. This one chopped. This did take a couple months. And then right down to the bottom. And this one had a little pop and then right down to the bottom. Then bounced again and made a lower low. It's never exactly the same, but probably going back to the bottom. This one over here, big dip, right back up, tap the top, and then flushed it down. So we could sit here a little while, but highly likely we're coming on down. Highly likely. That stocks above their 20-day. Here's stocks above their 50-day. Also tap the top. This could possibly make a little higher high, possibly up here before we roll. Entirely possible. And S5TH, stocks above their 200-day, are just sitting right here in the middle. So unclear. You know, we've got 2 out of 3 of those say we're probably going to the bottom. That's what that, you know, circling back in. That one says we're going down. That one says we're potentially going down. And this one, ambiguous. Too much ambiguity. Dollar. Stepped, put its toe across that 786 line. Then started reversing. Run the fib the other way. So next resistance is right there on the upside. If we bounce off of that, easily take us on down, potentially somewhere around that 97, 98 level. If we break above that, potentially taking us up to that roadmap line area somewhere around 103, 104 on the dollar. Apple still looks bearish. Amazon still looks bearish. Google still looks potentially bearish. They've all got the same pattern. This is what's scary to me. Like this pattern right here where we've got a move down, a retrace, a potential move down. A move down, a retrace, and a potential move down. Same pattern over and over. Down, retrace, echo. These are echoes in the market. Google, same potential pattern. Meta, same potential pattern. Microsoft already did the pattern. Probably going higher. It's the one Mag 7 that's on a different path. Completely different path. NVIDIA, same pattern. It might go hit the target. Even Tesla has the same potential pattern. Although we're pushing the limits here. Possible, because of the way we came into this in a different roundabouts way, this might do something different. Break out and go on up. But the pattern is there. Like, it's the same potential pattern as all these other Mag 7s. And that's why that target's sitting down there. Now I go pull all the things moving $2 more up in the pre-market, put them on the gainers list. Gainers. And all the things moving down $2 more and put them on the decliners list. And we go hunt for opportunities. So ANF, Abercrombie and Fitch. Nice pop. Look at that. Went right from scraping the top of the target right up to the Romep line. That can still lead to another flush lower. Nothing's done till it's done. One big pop doesn't negate a potential to go down again. So we just did we make that? Yeah, we're poking up through. Poking up through. Beautiful. Mount Vale Resorts. Nice. We need, so this is a big giant downtrend, and it's still a lower high than this one back here. Until we make a move up, retrace, hold a higher low, and start making a higher high. Till we get that kind of trend going, that can still go down here. We saw that same thing happen right here. A bounce, and then it went lower. So now we've got a bounce, and we can still go lower. DKS. They announced earnings again. That's crazy. They announced earnings last week, so I don't know. I guess they pre-announced earnings, and now we're officially announcing earnings. Whatever. Kind of weird. Anyway. That's still potentially bearish. Despite the pop, probably still taking her down. FRHC, Freedom Holding Corp. That was the target. Probably going to retrace. Right there. When did Bitcoin get perceived as real? I don't know. That's a... What do you mean as far as real? I mean, it's been through these cycles of psychology. There's people that have believed it was real the whole time, and then there's been naysayers that say it's going to zero. Like, you can still go on X or Twitter, or, you can still go on social media and find a multitude of people. I know other gurus that still think it's full of crap and call it a Ponzi scheme and whatever. PLTR. So, I mean, the dollar, some people find this funny, but the dollar is essentially the same as Bitcoin, except we can just make more dollars anytime we want. People are like, oh yeah, but the US government, blah, 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 blah. So the only reason that your dollar has value is because the person you give it to believes that it has value. That's the same with Bitcoin. That's the same with gold. That's the same with anything. Like, that's anything that has perceived value. The only reason it has value is because some other person is willing to accept that as a valuable thing. And then you could say the whole financial system is essentially a big Ponzi scheme because of that aspect of it. That's like, what is the true value? I mean, something, so like, if you paid me in a cheeseburger and I can eat the cheeseburger has value until I consume it, and then it's literally going to be crap later. But we don't use cheeseburgers because they have a limited shelf life, right? So we use dollars because they hold value and they inflate dollars. So our dollar over time has less value. You look at Bitcoin since the beginning, you've been able to buy more cheeseburgers with your Bitcoin. So it's actually been a appreciating asset over time. It's kind of like weird when you think about it. Gold, had you held gold for a long time, your gold has been appreciating. And when you price it in dollars. So, not to get too far off subject here, but, take the dollars out of the equation. Here's ounces of gold per Bitcoin. this over time appears to be an uptrend. We get these bubbles. Then we pull it back down, and then we get another bubble. And potentially, where are we going now? Are we going to break out, or are we going to pop back down? Is the party already done here? And other things like that we put perceived value on. Oil price in gold. You know, we're reaching a historically low point in this chart right here. This the right now, oil priced in gold, except for COVID, oil's never been this cheap. Right here. Yeah, I would be careful. Only crypto is an asset. I would be very careful. It's it's Bitcoiners that are telling people to put 5% of your assets in crypto and Bitcoin. If you step out of that realm, you may not see financial advisors on the whole advising that. You got to be careful that you're not in an echo chamber accepting that. So look at other things like platinum. What we're doing here is taking dollars out of the ratio here. Platinum is actually that's pretty. Platinum's going down the toilet here as far as platinum gold ratio. This is palladium. That's kind of at a bottom. Copper. So if you look at gold as the gold standard of value, the only thing that seems to be actually climbing commodity-wise, where's this commodity super cycle? All these things are hitting record lows, right? Where's that commodity super cycle they were all talking about? Cocoa, that actually looks like it might pop. And we came off of lows here. Cocoa priced in gold. It's like, what do you mean cocoa? Chocolate. That's CC1 is cocoa. That's the feedstock for chocolate. People are like, oh, it's never been this expensive. But when you price it in gold, it's actually got a long way to go still. Orange juice at the lows. Did that wrong. Coffee? Everybody complain about coffee being crazy, but really, pricing gold. Down near the lows. It's just a different way to 1 exclamation point divided by GC1. What's your measure? This is soybeans. Soybeans have never been cheaper. Everybody talking about how food is crazy right now. When you take dollars out of the mix, dollars are the problem. All right, like dollars are what's making everything go higher. Everything, like almost everything I've pulled up, is at the cheapest or near the cheapest we've ever seen when priced in gold. When priced in US dollars, that's where the equation gets messed up. So we'll go back and look at Bitcoin. 1 exclamation point divided by gold. This is the only thing that seems to be trending up over time. So where's the like we as humans are putting more value on Bitcoin over time. This only goes back to 2018, but it would continue down back to 2009. We as humans are putting more value on Bitcoin, and it's climbing faster than just about any other commodity out there. So this is an interesting, like we've never had this in the history of humans, that something could compete with gold. Something is fundamentally different here. Oops, ETH1 exclamation point divided by GC. Why am I down on Ethereum? Look at this. It's at the bottom. It's at the lows. Just like every other commodity. The only one that's different, only one that's been truly different, is Bitcoin. Something is fundamentally different there. When you price it all in gold. And why gold? Well, we go back over to infinite market cap, and gold is the biggest, most valuable asset in the world. It's the king. Okay. Debt would be the only thing bigger, and debt is not an asset, right? That's a liability. It's just an interesting, it's a different way to look at, how do you take your mind out of pricing things in dollars? If dollars are the problem, how do you take your mind out of pricing things in dollars? Price everything in gold. Or whatever you want to. You could price things in Bitcoin. That's where things get interesting too. Take dollars out of the equation. Look at that. Oil's never been cheaper in Bitcoin terms. Except for COVID. Even cocoa priced in Bitcoin is actually going down. We saw cocoa priced in gold. It was cocoa's outrunning gold, but it's not outrunning Bitcoin. So there's a different way to look at the market, I guess. Alternate. I like to look at where's the value of things, and this is a way. This is a way to value things outside of dollars. How do you take dollars out of the equation? Compare it against other things that are considered assets. Hopefully that was helpful. David seems to have completely blown his mind on this today. But, I know Goose, I've stressed this with you several times. It's like, how do you take dollars out of the equation if dollars are the problem? So I had one set up today that was interesting. That was this one. Jump back to a daily chart. Turn on the Apollo algorithm. My algorithm found this potential pop right there. It did not meet the criteria for TradingView's algorithm version to trigger an entry, but this has potential to come right up here to 82. And if we look at the historical, this thing tends to, even though this is not statistically significant, it does tend to perform pretty darn well. This is one that might work. I probably wouldn't put money in it because I like to see bigger than 30 trades to give these numbers statistical significance right there. So this is, if you wanted to go for it, I would go smaller on this position. Doesn't mean it's not likely to work out. Obviously, the last 15 trades have been pretty smoking hot. But that's only 15 trades. So, in the same respect, it's like flipping a coin one time and saying, oh, I got heads, so every time I flip the coin, I'm going to get heads. And you got to be careful. Yeah, one of the followers said, every day you watch, it's like a graduate level class in economics. So hopefully everybody understood the point of looking at assets in other terms besides dollars, since dollars are the global problem. Everybody's like, oh, we're not getting rid of the petrodollar, the blah blah, everything priced in dollars. It's the world's reserve currency. But what happens when the world's reserve currency is the problem? UCTA probably coming on down. IONX is IONQ. There it is. IONQ, possibly. Yeah, that's got the setup to going out. 58 right there. Hey, channel member, thank you, Charlie, for becoming a supporter. Booz Allen. Let's see. And turn it down again. That's why we got to watch out for that roadmap line resistance. That's why I was stressing it on some of the other charts. Can easily lead to extensions lower. Sora, not enough candles to do anything with. BSX, that has potential. 110. Like, this is, we look at the statistics, 23 trades, 69%, runs a little light. It's not statistically significant, but 7 trades is not going to pull, probably not pulling these numbers up. So this one starting to favor failure over success. Be careful on BSX. PDD. China stuff's been looking pretty rough. Alibaba, I have this strong feeling that even though we fired off that entry, this is going to be one that fails, and we're going to come down here, the 80 to 90 zone. Just got this feeling. CEP. It's starting to look like the bubble pattern right here. Be careful. What do I mean? So we came down off this high. Popping up again. We do this. Fold down in here. Pop up again. We start building this zone right here. Like this. And we keep filling it out. Eventually, when we break down below here, that's when this comes all the way back down. If you've never seen this pattern before, check it out right here. We go on a crazy big move up. Get this chop. And break down. Typically coming all the way back down. We can go through, hundreds of examples of this in the market, but this is highly likely at some point in the future to come zipping right back down here. Be careful chasing that one. All right. Bias for the day. I'm not feeling super awesome, so I'm just going to wrap this up here. Hopefully everybody is with me today, having a good time. I kind of expect this to top out right here. Like this, we did the lower low on Friday. Kind of expect us to see a lower low. This is an odd one right here because the market wasn't open Monday, and we got this big pop yesterday. Today we're opening here. It's possible we push this on down into Friday this week and then make that continuation in the next week. So be careful out there. We may see things turn sour grapes today, especially. I mean, we may hover through the FOMC minutes at 2 p.m. and then get a big negative reaction. Entirely possible. So be careful out there. I guess we have some kind of inflation number coming out too, right? Yeah, preliminary GDP tomorrow. It's just preliminary. Friday we get the PCE. That should be the spicier number, I think, this week. So I'm on a roundtable here, I think at 1 o'clock with a bunch of other gurus. Hopefully I'll bring some energy. But have a great day, everybody. We'll see you again soon. Thanks for coming. The account you save may be your own, so be careful out there. Oh, just checking in over here. Before we go, check this out. My 1 month down a little bit because of the way the month rolls, but look at that. The 3.79 on the account so far over 3 months, 100% win rate. Still the same, and all time cranking it back up to taking care of those COVID losses I booked way back when. If you're wondering what this, we're talking about this right here. All time, I had some COVID losses, but recently, thing just going to the moon, baby. I'll post an update on what I've got open for channel members. And if you want to see all the twists and turns, Termar Trading Labs where I do that. So have a great day out there, everybody. We'll see you.